All right, all you devils out there, happy Friday. Sam here with you. Oh, it's about midday here on the 9th of September. So, of course, we're going to take a look at Bitcoin, which is making an impressive move here. This might upset a few counts, but we're going to look at it here in great detail. We'll look at both a bull and a bear count, as well as we'll take a look here just with regards to the market structure and see if we can glean anything useful from that as well. So we'll take a deep dive into all of this right after a quick word from today's sponsor. Our sponsor for today's video is BitGet.com. Established in 2018 and registered in Singapore, BitGet is currently serving over 2 million users in more than 50 countries around the world. There are 296 coins and 354 trading pairs available on the exchange. BitGet's 24-hour volume typically ranges around 300 million, meaning you'll find excellent liquidity. And while BitGet offers you a wide variety of spot trading pairs, where it really shines is in the derivatives markets. Here, BitGet is among the top 10 exchanges worldwide by trading volume and offers 95 trading pairs. Signing up is fast and easy with no KYC requirement for trading. That said, KYC clients will have access to additional features of which you can learn more via these drop-down menus at the top. Once you've signed up, you can fund your account by depositing crypto or purchasing crypto. If you click the link below this video in the description and you fund your account with $1,000 or the crypto equivalent, you'll be eligible for a $150 bonus or a free month of the TradeDevils University educational membership, a $200 value. All right, awesome. Okay, cool. So let's. So I'm actually over here on BitGet here. So I've got what have I got here? A 4-hour chart here. So let's do the bullish count first, and then we'll finish with the bearish count. I mean, this is encouraging here to see, but one day does not a trend change make, but it's an encouraging start. If we certainly it creates the potential for us to have put in, the emphasis potential for us to put in this low here. So let's start with let me put this in context here. So now BitGet has only been on TradingView since early this parts of this year, so I can't get a full history here. But if we put that in the context of what I would propose and bring over Motive Wave here, probably the most well, I don't want to say this. This is the count I think where there's the most agreement here. Now Bitcoin has created a scenario here where there's probably a good 4 or 5 ways that you could count this. And no one's going to know. No one knows, but no one is going to know until we see what's coming next, right? Do we have a candidate here for a low? Yeah. Now, what is it? Well, certainly we can make a strong case for it to be a potential 2-way, right? So we completed the impulse. Oh, the 2 is the COVID low. We completed the impulse here into the 5, and we've just done an A, B. We're just doing a zigzag. Right, that's probably the simplest count of all the possible scenarios here. Now, we're gonna get a little more complicated, but probably the simplest count here. I tend to like these in yellow just to kind of emphasize the correction. It's simple. Now, could we have something here that would suggest that we've completed the zigzag and we've just gone into a 1-2 with a very deep 2? Well, it's certainly a contender. Let's look at it in a little more detail over here where I can zoom in a bit more. So here, well, there's a couple of things to note. So this would be the last impulse of the zigzag to give us our candidate here for either a 2 or, dare I say, a 4. Right? I know that's the most hated count in crypto, but it's still perfectly valid. So let's just go with the assumption it's a 2. Right, as we just looked at it, right? So we put in the 1, now candidate for the 2. All right, so let's consider that. If that were the case, could we make our own case here, an evidence-based case, to suggest that we've got a good low here? Well, it got tested, right? It's been tested repeatedly. Now all I've done is just mark out the demand zone here, right? So here's the last swing down before we got all the changes of character and ultimately then got our break of structure. So we can recognize here we have a demand zone, and lo and behold, boom, 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 right? Test it. I mean, literally just puts a toe in before we get this rocket launch coming out of it. So on the one hand, right, just as in terms of identifying zones here, this is literally like you can't script it any better. What you want is for it to tap that zone and then rocket out of there, right? And in this case, it leaves a couple of fair value gaps, right? So it's so strong here, we've got just massive acceleration here. So of course, what's happening here, right? We can all just deduce what happened here, right? So as we're coming up, right, shorts have got to cover, right? So the algo as well, you know, covers right here, right? It's out after the 65. So anyone short here is just getting, you know, those are some real tears, right? So you know there's lots of liquidation as this rips up here because the market was heavily short, all right? And with good reason. Now, all right, so I mean, okay, do we have enough here to say, oh, low's in? Well, no, we don't. But it's the ingredients that are here. So how would we count this? Well, you got to work with here. I guess we can take off this. Let's pull back out here. Just the regression channel, right? Since I'm not in log scale, right? I like to use a regression channel, so I can just swing high to swing low. 2 standard deviations on either side, right? Self-contained all the way down. Then I get this very ugly diagonal, but it's a contender, right? It's not the launch that you would hope, and ideally you'd see an expanding. It's a contender, right? Let's not overcomplicate it, right? Can we get a 5 in here? Yeah, made up of a series of 3s, but you can get a diag in there. So here, let's zoom. What am I on, a 4 hour? Let's zoom in a little bit. Let's go to a 2 here. All right. So how can we make this work for a bull, right? So here we are, just having tapped that little demand zone here, and then the launch that comes out of it with all the fair value gaps. So of course, from the near pivot here, the near pivot high to that exact low here, well, we've broken pretty substantially, but of course we're not out of the woods here until we break here, right? We got to break this 65, call it 22.9-ish. You know, we got to get a close above that 65. So how realistic is that? I mean, could we? Oh shit! What am I? Let's go to a 1. Right? Could we have 1, 2, 3? Well, let's label it and just see how this would look. Okay. Well, it's kind of ugly. You damn near. Oh, you really don't have much of a 2. Oh shit! Is this we're gonna get ourselves in trouble here? Right? 3, 4. Let's see if we can. Let's go down to a 30. See if we can make that work. All right, of course, it's going to be a little squirrely here to think I can get a 5 in there. But again, there are moments where it's just not going to be perfect. Now, shit, if I went to a 15, can I can probably wedge it in there. Yeah, actually I can. That's usually there, right? So 1, 2, 3, 4, 5. Well, shit, I got an impulse actually. So let's get it labeled. 1, 2, 3, 4, 5. Let's get you out of there. All right, so here, maybe I should take that one down. We'll go the minuscule. Let's get you in yellow so we can see it. Okay. Well, this is some cluster. W, X, Y. Well, shit, who cares, right? Does it really matter? Right, I don't know that it does. What do we get here? A, B, C, right? We can probably do it that way. Again, I don't know that it matters. Oh, shit. Let's go A, B, C. Get that. At least label it. Go minuscule here as well. All right, so again, this is just ugly, right? But we're down on a 15-minute, right? It always gets a little squirrely down here. So how are we getting out of here? 1, 2. Again, it's iffy. Shit, do we have to do it here? That's a cluster F. That really is. Let's see how we're gonna get that done. God, I probably should have worked this out here. So we're going to have to do it like this. We're going to have to do something along these lines. 3, A, B, C, 4, looking for that 5. Something along those lines here would be, I guess, about as reasonable as, well, without really wasting a lot of time here, or spending too much time here. So can we get out of here? Oh, God, that is ugly. Oof. Is there another way I can get this done? I might have to do this as... I might have to do a triangle B here. Oh. Oh, give me a second to work that out. I'll be right back. Okay, I'm back. I figured I'd work that out. I just paused the video rather than bore you guys as I tried to figure that out. Okay, so I think I've got it. So we can get her done here. So it looks like I can get my impulsive 1 here, and I've got to do this through a WXY, but I've got to get 3 into a W, 3 into an X, and then I'm going to finish the Y with this triangle. So I'm gonna get there via 1, 2, 1, 2. Right now we've got quite a ripping 3 that's come off of that. This is a shit, you know, it's a bit of a guesstimate in here, right? I mean, here's where we go sideways, right? We got a wick here, but we essentially stall. Now, as we keep going, now, do we know the top is in? Well, we don't, but we can certainly do a little bit of measuring here in terms of like, if we went up that high, how far out of normal range would we be? Well, if that's the 1 and that's the, let's get right on that last little pivot low before we take off. Well, here's the interesting, right? So here's the 2618. So if the 1, 2, right? It's not that they don't go beyond that, but that's definitely a pretty ripping 3 to get up to a 2618. Now we don't know we're going to get there. We're looking a little top heavy here, but one more thrust up, and then of course where would we be? We'd be right to the. Oh, let's see. I'm gonna have to go back to our 2-hour here. Now we're back to the 50. Which is why we gotta constantly be monitoring, right? So what's the potential? If this, then that, and if not that, then this, right? So from our last pivot here, for the potential, right? So this being the candidate for a 1 in the bull count, if we're gonna come down here in a 3, which unto itself is a little tricky to pull off. Let's pull that off, but doable. So let's, here, we'll just hide that for a second. All right, so how are we getting here? Well, we got to do an impulse into a 5, 3 into a B here, a shallow B. And then this is, this is tight, right? You get a triangle here in the middle of it. So to work it out, that's got to be the 4. So you got to go 1, 2, and that is, I mean, that's skinny, right? I mean, that's about as deep as they can go, right? So we can get into the, here's the B. So shit. I mean, it's ugly, right? So, but we don't overlap here. So the spirit of it, I think, plays. So you can come down here as a 1A, B, and then you've got to go 1, 2, 3, triangle 4, and then 1, 2. And again, it's very skinny down here. 1, 2, 3, 4, 5 gets you done. Force fit. Maybe I might have been more reluctant to label it that way had we not seen this, right? If I had just, been sitting right here, well, maybe not. But with that monster rip, I'm looking for a finish here. Can we get it done? Yeah, we can get it done. Right, so we'd come out of here. This would be an ABC to get us done, right? So if we allowing for the diagonal in the 1. Put it back together. Diagonal into the 1 and ABC, right? Sharp correction into the 2. It's very deep. We go 887, if I'm not mistaken. I think we go 887, but we're getting right into that demand zone here. I think we do go 887. Let's get platinum on there. Right? So we go right 887. Right? I mean, you keep those for a reason. There's 886, 887 as we hit the demand zone with a good candidate here for this just to be an A, a B, and a C, and then now we come out here. So if we if we complete this impulse, okay, well, where's the right? That's the one you're after. So assuming, I shouldn't assume it, right? But if you didn't catch the rip here, right? It did happen. Well, it depends where you are in the world, right? But so, yeah, I mean, if you didn't catch that, fear not, right? I mean, number one, we don't know that that's a hard low. It's become a candidate. Now, you'll note here on the 2-hour here, where do we go, right? I didn't draw that, right? This is Sonar Labs, right? So, we partner with them, right? So anyone interested in Sonar, right? Just go into our link tree, right? Here's my eyes. I pause for a little promo. For Sonar Labs, right? You'll get an extra discount by using our link, which you'll find in our link tree. All right, moving on. So note here the supply zone, right? All it's doing is saying, okay, last swing up before we headed down. So we went, look what we've done here. We've gone for, just based on market structure, we have a supply zone down here. We went to the demand zone, rallied right back to the supply zone. So can we say anything other than we're range bound right here? No, we can't. I mean, it's a good looking move, but okay, it means something to us if we get this, right? Well, I should say to a bull, right? So if we get this to complete and we get a good impulse off of that low, then this starts to look more promising as a good low. Right, we certainly have a bear count here, and nothing that's happened here would invalidate the bear count, right? I mean, we can't really even lean too hard into that. And even if we finish here, and we get an impulse, if we do, right? We can't say that we will, but if we were to get an impulse, it still could be just an A B. Pardon me, I should say it this way. Jesus Christ, come here. We could just have an A, a B, and a C. Going up here, kind of skinny on that. Let's. Something like that. So we could have an A going in here. We're still contained within the swing structure here. It would still be an internal retracement. 3 down for the B, up for the C, right? As long as we stay in this range, right? Can't eliminate that, right? So the point of it is to kind of map out a couple of different scenarios. Okay, could this be our pivot? Yeah, it could be. Okay, well, that's fine, but let's not completely lean into that without evaluating the bear count. Because right now, this is just one day, one little pump move here. Okay, encouraging. But is it enough? I mean, what's, you have to say, okay, so why today? Why today? Well, part of what's been driving this down, certainly plenty of negative sentiment. No real catalyst. Potentially, the Ethereum merge is a catalyst, potentially. But as the market's been driven down here, and we've gone through these areas of balance, imbalance, balance, imbalance, balance, imbalance, right? That's how Bitcoin moves. That's how most markets move, right? It's just from a place of, okay, agreed upon value to one side gets more aggressive. Oh, now we're back to value. Now we have imbalance, back to value, right? So it's just over and over again. It's the same thing, right? They all trade the same way. So as we look at it here, okay, so what's just happened? We came down here, we hit potential demand, and now we had a little pause here, which gave us that complex 2 via the WXY imbalance. Now, we're not here long enough to know if the market is accepting this as new value, but we can look at this and say, well, we have returned to an area where the market found balance and value. Now, value is a relative proposition, and it changes with time. So as we look here now, our traders looking at this saying, oh, we're back to value. We were imbalanced down here. We were away from value. Now we've come back to value. Well, what we're waiting to see is, okay, we revisit here. We don't have to wonder. There are going to be shorts here looking to defend positions, right? So that's why it's a supply zone, because you can see how quickly we came out of here. There's potentially unfilled orders here, people that didn't get filled here. That's part of it. You'll have shorts here that caught the ride down that are going to defend, right? Looking to push for a new low. Where's liquidity? We know it's there, right? But it's also right here. So if we can push up a little further, it'd just be beautiful to see them grab that liquidity, bring it down now, right? Now we'd come, think about that. Okay, so where potentially could we find the support? So if we go 3 and we're coming down for the 4, well, we do the same thing we always would. Oh shit, if I can get in there. So if we were to hit, oh shit, I'd love to see us do it that way. Let me get back to where's my wave 4? There we go. So we come back into a wave 4 here. Now again, I don't have the pivot here, but if we were going to go up and grab that liquidity here, and then bring it back down. Oh, look at that, right? Where you'd have this nice zone here where we had prior, you could look at it this way, where we had prior agreement on value before we moved out through imbalance. Now, if we were to come back and, well, hey, we had value here. We had agreement on value in Bitcoin there. But if we come back down here, are we testing again? Does a bunch of supply drop in here? Or are we just going to come down here for a nice clean 4? And then rip for the 5. Now, is it a 1 or is it an A, right? We're not going to know until the market's going to reveal itself slowly. Nobody can know, right? If you're an Elliottician, you're making an educated analysis, right? So I don't want to use the word guess, because you're basing it off of patterns that repeat on a second by second basis, right? I mean, these are well-established patterns, not because the patterns themselves are magic. I try to remind you of this. It's not that the pattern is magic. It's that the pattern is just a reflection of human emotion, right? That's why it's so consistent, and it doesn't matter what the asset is. It doesn't matter. What matters is, well, I was about to say it doesn't matter because people all do the same thing. Well, depending on what market you're trading, right? And crypto may be the one exception here. Most markets are 95% computers anyway, right? Very small percentage are actual human beings trading the market. And crypto is one exception, although we got plenty of algos in here. It's the one exception where we don't have massive institutions moving the market like what happens in traditional assets every single day. They move the market, not us. They take it up, they take it down. We just try and tuck in behind them, right? Which is why we want to track with our measured move algo, which is why the Elliott counts gives us, in my view, it gives you an unfair advantage. Does that mean you're going to be right all the time? Of course not. I can absolutely guarantee, I don't care who you are, you're going to be wrong more than you're right. It's just the reality of it. But we get an unfair advantage here because when we are right, if I'm using Elliott Wave here, I know where this is going. If it's going to complete, right? Now, once it gets here, what do I know? I completed a 5. Do I know anything more than that? No. So what's the big advantage? So why is that such a big fucking deal? Well, because I know that the tendency, again, there's no guarantees, but if I get a 5, it's most likely to be followed by some sort of a 3. Now, if I don't get a 3, so this creates a trade opportunity. If I don't get the 3 and it turns into a 5, okay, well, I'm going to have a loser on my hands here, but I'm going to get new insight into where the market is likely going. 5s and 3s, right? It seems hard to believe it could be that simple. Can it really be just that? Can it really just be 5s and 3s? Well, to some extent, you really can simplify it that. Now, we got, a 3 is... We have 24, 26 different types of corrections we have as Elliotticians to deal with. So just saying, oh, it's going to be a 3, boom, go. Well, look what we just had to deal with in here, right? I mean, we're going through a double zigzag here through a finish into a triangle. Okay, so that's not for the everyday average, Elliott Wave for dummies, right? I mean, that takes a little training to know that you can actually dig that out of there and how to do it. That takes a little training. Oh, geez, I wonder if there was a place where I could learn to do that, right? So maybe the educational membership, if you looked at that and you're like, oh, fuck, I have no idea what that could be. Well, educational membership will eliminate that problem. Okay, right? So again, I just come back to, do we know anything up here? Well, let's see if it completes first. So what can we do? So we can notice here, okay, we've come right into a potential supply zone. It's always just that. Potential supply zone, the market's, getting a little top heavy. Well, nothing says we don't run again. Now we're going into the weekend, so, always a wild card when we go into the weekend. But so at the most rudimentary level, what's the main thing we have to pay attention to? What's going on with our friend, the measured move algo? What's going on here? Well, when I get to the 50, boy, I'm very curious to see what happens. God, wouldn't that just be beautiful? Because what's most common? The most common pattern for this algorithm is to start selling at the 50. If it keeps going higher, it would stay short until we get to the other side of the golden zone. Now, if I get here, algo's out. Right, out. Now, some people will tell you, they've changed it now to the 66. Listen, if we get a close above the 65, you've lost the sell side algo. That would be a high class problem. Where would we pick it up again? Just to be clear on this, that doesn't mean, oh shit, off to the moon. You're going to pick one up right here. Again, every pivot, that algo is going to be there. And I mean every pivot, every single time. All right, so what, right, we'll be right there. Could I get that? Or do you see how, wait a minute. See, if I completed the 5 up here and I broke the sell side algo, well, here, I'm going to get it again. But what if I just outlined there? Right? 3, 4, 5, right? Going to be way up. Oh, shit. What do I got here? Let's do something big, right? So 1, I don't like that one. Let's get a circle around it. There we go. Okay, 1, 2. Now, that's not that hard to do, really, right? It's just not. Now, okay, this is a little tricky. Some of this, Bitcoin's never going to make it easy. But some of this, we could simplify it. We tend to, we overcomplicate. And which, you hear me say this a lot. What's the simplest thing I can see? What's the simplest solution? Again, I know that that's not an easy solution down there. But in terms of the broader swing structure, boy, is this setting up nicely. Now, again, I don't have any of this, but I'm putting together a game plan for it. Now, before we get all completely just amped up over the idea of like, oh, the low is in, time to get, balls deep and get long with leverage, slow down, right? Let's be sure we're completely clear on the bear side of this equation so that we're not caught off guard here, just leaning so heavily into the low is in. So this bear count here is interesting. This did not come from me. This came from one of my new, who sent this to me? I think it was my newest blue belt amongst the membership. He's the one who sent it to me. I have a feeling he might have gotten a little help. It was kind of a collaborative project. There's a couple of really strong Elliotticians that work with members that are on their way up the belt system. So I think there may have been some collaboration on this, but there's an interesting bear count here that had not occurred to me. I mean, sometimes you just get a blind spot to it. So let's look at that here. All right, so let's consider the alternate. Okay, so I'm going to stay with the idea that we completed the impulse up here. While they're certainly, we've looked at them for, hang on a second. So as I said, we've looked at several scenarios here that would give you some alternate ways to count this, right? I mean, I'm just going with what is I would propose is the most agreed upon count. Now there's some that, all right, I certainly maintain the potential here that the 4 is over here, right? So nobody likes that count. I get abused every time I bring it up, but it's one to keep in mind here. And again, we'll see how it resolves. But let's look at this bear count here. Now I'm out on the daily, and again, I think this was a collaborative effort. So I got a couple of things on here. So you'll recall from last week we looked at the wolf range coming down. So again, as is the way you want to do this, right? You take the first swing, and then if you get 100 right on the tick, then you so all I've done is just go to the first swing low and then going down 100. Now we get it to the tick here, and then here's the 200. So the idea being, if we're not going to launch out of here into a new bull run, right? Via launching with an impulse here, if we're going up and then we're going to roll over again, well, how are we going to get that done, right? What would the count be? Well, again, I think it was a kind of a collaborative effort here as I went through the Bitcoin trading channel, there's a lot of interesting stuff in there. It's interesting to see these guys, the members, work through scenarios, right? And I think collectively they came up with this count. I think it's quite good. So we'd go into an ABC into a W. This gets a little, there's a triangle, and it doesn't matter. We get an X here, and then an ABC into another. So we have a WXY, and then we got an X here. So that potential, the proposed wacky diag, as in it was, well, it wasn't that wacky. I mean, a diag here. So we could probably work it into a 3, into an X. And so we'd have what potentially now it would be serving as an A wave here. The B is shaping right now. Now you wouldn't want the B going beyond the X. So there's an invalidation point here. If we start to really rock it, just here, look, let's zoom in there. Right, if we rocket past this level here, okay, then I'm going to start to feel better about the idea that this is a 1, 2, and we're going 3. But as it sits right now, this could certainly be the A. We could certainly look at this and say, okay, well, it's encouraging today. That could be just the A, the B, and the C of the B before we go A, B, and then we finish with the last flush down here to get to the 50 from the low, to get to the 200% via the wolf range, right? So again, just expanding the initial, here it is, just expanding that range. Here's 100 to the tick. Here would be 200 to the tick right in front of the 50. So we get this nice technically confluent zone down here. What else do I have here? I think it was one of these. We had a golden zone. Right, so here it is. Okay, so I'm using the secondary. Oh, shit, it wouldn't matter. You could use this one. If we use the subdominant here, so this is the last swing high before we go down here. We're coming just shy of the 50. Interesting, right? Potentially the same scenario here. If we come back here, so you could see this became now this is an example of potential support becoming resistance, as opposed to, that's not a supply zone. Once we head this down, now I do have a supply zone here. But as we were coming back up here, that's just potential resistance. Very big, huge difference between potential price resistance and a supply zone. If we come back up now, it's a supply zone. On the first time up, it's just resistance, right? So we can look here and say, oh, well, there you go. A pretty good resistance zone here. Now, if this is going to, Get you out of here. If we're going to come up here, and so first we got to get through the supply. Then we got to get through the price resistance. Then we got to get through the 65 and the algo that'll be sitting there pushing the other side of it. Once we get through that, oh, okay. Well, that's no small task. And then no sooner do you get through that, and you're right back to where the market was comfortable with value before the imbalance. So are we just coming right back to value? Well, again, you got to check each of these, right? Well, look at that, right? So we're secondary pivot. Oh, hello, algo, right? But where's the dominant, right? The big one. We got to get through that one. All right. So here we'd be coming back into, right, the consolidation zone here at the 50 from the X through the Y, right? Can't eliminate any of that. Oh shit! In actual fact, you could end up here. A, B, C. Right, if this does it as a 5. Well, let me redraw that so I don't confuse you. You've got a candidate here. This could be well, let's label it so I don't confuse you here. All right, I'm assuming most of you will have already done this in your mind's eye, right? So we got a candidate here for that, right? So we'd have WX, Y, X. Now we'd be looking for 3 to come down here, give us the Z, finish at the 50. So while this is okay, it's good, right? Shit, I'm long as hell, right? So I mean, I'm glad to see this. Very glad to see this. Right? Let's not get overly enthusiastic, right? We need a 5, right? A 3 doesn't help us. Not to mention, we could have this could be 1, 2, 3, 4, 5 of a 1, right? We could have, right? This could go higher. Nothing says it has to stop here, right? So you can, again, map these out. This is worth doing. Oh, if that was, right, we could have the 2 here. Now I got to have a 3, 4, 5, right? So I could have A, B, C, and still be in a potential down, right? So what's the criteria? Here's a swing, right? As long as I stay internal to that, the odds favor a push to the lows, not a break of the highs, right? The path of least resistance is down now, right? So for the market to change the trend, boy, this takes a lot of muscle, right? This takes a lot of bull muscle here, right? So all of this resistance has to be broken along the way, and there is no shortage of it. Now, could the ETH merge to it? Maybe. This is a really well thought out count. Shit, I'm kind of mad at myself that I didn't see it faster than they did. But again, this is the benefit, right, of a community like ours, right? There's a real collaborative effort. People are all like, "What is the bloody count?" Right? We're all trying to figure it out, and it's not always me that's going to come up with the answer. In fact, often, right? I seek out my senseis, some of my best traders, right? We exchange ideas all the time. I'm never here to tell you that my count is the right count. I'm here to just show you how someone would apply Elliott Wave and teach you a few things that I've learned from 30 years of doing this, right? So hopefully that's why you come to watch these videos. Okay, so with that said, all right, WXY candidate XZ still in play. That would be wouldn't change this count at all. We're still right. The highest probability zone for us, right, for that wave 2 is between the 50 and the golden zone, right? So if we're going to come down that low, we're talking about getting down into the 14, 15K range. Again, remember the wolf range was projecting right down around 15. So you've got a lot of potential confluence here to suggest that this could just be what's happening here before we do that. Well, of course, you want an ABC. You want a zigzag in there to finish it. That would be some November of 21. And again, I'm guessing over here to February of 23. Well, the balance of it would be that's really what we're talking about here. After all of this and all of the... been a year we've been dealing with this, right? And ultimately, right, so as I was saying earlier, what's the simplest thing I can see? Swing, retrace, and no doubt this is a complex retracement, but it's still internal, right? I got to swing high. I'm essentially making a very complex 3 to correct it after the 5, assuming that the 5 is done here. Interesting. Interesting, right? So we got a lot of candidates here. Now, so what I'm not saying is that, whoa, shit, I got to wait for this to go up here, find out what that is, and then I got to find out what this is before I can trade this. And of course, that's never what I'm saying. We're just looking at the longer-term swing structure here so we can kind of identify some potential areas of interest for potential action. So, okay, do we have trading potential here? Well, we were kind of just looking at that. Oh, sure. Let's get, what do I got over here? Oh, let's come back over to this one. All right, let me kind of clear this up a little bit. Kind of clear that up. Okay, so 3, 4, 5. So where's the trade? Well, I don't know that right after that bull move like that. So an aggressive seller here, there's not an unreasonable case to be looking for a short here. Do I have anything below? I don't think I do. It doesn't matter, right? I don't lean on them too much for this kind of stuff. Looking for any indicators below. What we can see, right? So we've got a potential target down here at 16 and change. But this, very impulsive, very, very good looking impulse here. So my suggestion would be, okay, since this looks like a completed impulse, if we get something to come down here into this structure here, where we have, again, not necessarily a demand zone here, but we've got potential price support. We have some fair value gaps along the way here. And of course, we know the premise there. I'll zoom in there a little bit, right? So we've moved so fast here. So here, this is the Sonar Labs indicator, just highlighting where those fair value gaps are and then kind of splitting them in half. That's why we like this indicator. Again, right? See that link below, right? You get a little discount from us. So 1, 2, 3. Now, if we start to come down here, the whole premise is the market went through this so quickly that there's likely to be unfilled orders here, right? People are trying to they didn't get the price they wanted. So if we're going to come back down here into any of this zone here, so you got a couple of different ways to look at it. Say, well, consolidation. Well, I've got the retrace here for my proposed wave 4. Well, again, you know, if you wanted to tighten that up, something like that, or all this resistance, right? Potentially now support as we come down here. So if we come down here in a 3, right? Well, you know, again, how aggressive do you want to be, right? I mean, one thought is, right? Think to our purple belt criteria to pass that 3s and C's. Trade the C of the 4, right? So why would you do that, right? Because it's a very low risk trade. That's the only reason I would suggest that. Right, because I could sell it on the B on the assumption here that, you know, if we're going to go up and get that pivot, and of course, why it could be an expanded B, right? You don't want to trade on that idea. We could trade something like that. All right, well, 2.5 to 1. If I'm going to get a little deeper, 3 to 1. So you might have to bring it down a little bit. I wouldn't want anything less than 3 to 1. So wherever my 3, right there. Okay, so is that good enough? Well, you know, it's not a trade I would take personally, right? Because it's not that I won't. I just prefer not to be shorting Bitcoin. I'd be sitting here. I'm looking for the buy, right? I want this. So I'll pass on this. Now, of course, to get a little bit more than 3 to 1, right? You're just gonna have to lower the range to your stop, so you can't use the pivot here. Right, the whole point of trading a B is that the odds, well, as you've heard me say many times, right, if they can't get the pivot, the stops will be there. If they can't get them, right, market's going to fall. We're going to roll over. Now, you can see that kind of a thing, right? You see it all the time, right? It's just a grab of the liquidity because where are the stops, right? Traders know this, right? Right, so that's why you get the expanded B. Right, so there's a stop run here, and then if you came down in a 5, would I buy it? Yeah, hell yeah, I would. Right, because even though you took the loser here, right, so assuming you didn't do something stupid like this, right, so you controlled the risk exposure, right, you're welcome to the party, right, if you're going to get in the ring, you're going to get hit. So if you get hit there, okay, well, that shouldn't be, if you're taking it short in a bull run, that shouldn't have been, levered up to the hilt and big size. You're trying to hit a single there. You're trying to hit a single to hit a triple here. So turn that around. This is the trade you want, right? That's what you're waiting for. That's where you're going to have much better upside. Well, I would propose to you can have better risk reward here. So let's kind of tighten it up a little bit. Give you, you really don't want a 4 going that deep, right? So I would kind of put it in this range here, something along those lines here. Now, if you go here, okay, well now I still got 5 to 1 if I'm going to get There's algo target. Here's to the golden zone, which is the big resistance. Let's just use algo target. Right, there's 3.5 to 1. Now we get a little bit. Now you know there's going to be a fist fight here. But if they get through it, right? Well, now maybe you take a partial here, 60% off here, 65. Let another 30, 35 run for the potential golden zone hit. 1, 2, 3, 4, 5. What is it? Is it an A or is it a 1? No, we're not going to know, right? No way to know. So it's kind of fruitless. It doesn't matter, right? Do we care? Why would we care? Well, we care in terms of long-term potential, but in terms of your next trade, where's the next trade? Right? It would be the exact same thing again. Doesn't matter if it's a 1 or an A. Doesn't matter, right? 1, A, B, right? Now B could go higher, but the trade you're taking is the C, right? 3s and C's. Now here, well, so you say, oh man, so if I'm in your blue belt program, or oh shit, what is it? No, pardon me. If I'm in your purple belt program, I can't trade that 5. No, that's not what I'm saying. I'm saying you can only trade the 3 of that 5. Right? We want you focused on the money-making wave. Where's the money-making wave? Right? That's the 3. Right? Where's the money-making wave on the way down? Right? We want you. If you can't do 3s and C's, you're not ready for the rest of them, right? Focus on those, right? You got to be able to get those, right? That's where the best risk reward is. I mean, if you did nothing else, right? I mean, that's why we do that. We want, so if nothing else, if you're just trading 3s and C's and you forget everything else, you'd be well served by applying that discipline. So where's the trade, right? Here, right? If we come down here, what is it? Oh shit. If it was a B, do we care, right? At this point in time, does it matter yet? Not really, because if we think we've got an A and then we go into a B, say we get a B at the 50, I mean, sure we care, right? Ultimately, right? But in terms of the next trade, do we really care? Right? It doesn't matter to us until we start approaching the 4-5 of what could be a bigger one. Then, yeah, it's going to start to matter. Right now, I'm just looking for 3s and 5s. Okay, can I get the C's and 3s of those 3s and 5s? Right? Can I get that? Right? Or is it here? And this is a 2. This is a 2. 1, 2, 3. Right? Doesn't matter. A, B, C. It doesn't matter. Right? Hello. That's good news for you, right? Doesn't matter. Oh shit, is it a 2, 3, 5? Oh, I don't know, right? It didn't don't get hung up in that. There's the trade right there. Here's the trade down. Here's the trade up. It's not that complicated. Look at when you do it that way. Look at the risk reward on all these trades. Now, are we going to be right about all those? Most likely not. Right? Statistically, no is the answer. As I remind you, our objective is not to be right. Our objective is to be profitable. Right? Now, you can be wrong here a few times, right, and still be profitable. Right? With a little trading discipline and some knowing how to work with the market when it's going your direction, right? I mean, it's again, I don't want to make it sound easy. It's not easy. So please don't take that from this video. That's not what I'm saying. I'm just saying that the mapping here, it's not rocket surgery, right? I mean, it's not that fucking hard, right? I mean, it's 3s and 5s, okay, right? So we can know what we might anticipate here, and the little things are going to be a fly in the ointment. Oh fuck, I got an expanded B. Oh, I thought it was a 5. It ends up being an expanded B that put me into the 4. Right? You're going to get tripped up along the way, right? I mean, it's just the reality of trading. As you hear me say 1,000 times, you are going to get punched in the face if you step into the boxing ring, and you're going to get punched in the face, right, when you're a trader. Just don't give him an open uppercut to the jaw. Only you can do that. Only you can fuck yourself in here, right? It's by just giving it too much risk, right? Oh, I didn't want to get stopped out. Ah, shit, I was going to ruin my weekend. I didn't want to get stopped out, so I just let it run, and it just kept going and going and going and going, and I just didn't want to get stopped out. Well, now, how you feeling about not getting stopped out? And then you're back to, oh, fuck, man. I coulda. I woulda. I shoulda. Right? The 3 most destructive words in trading language, right? Woulda, shoulda, coulda, right? You don't even say it. Don't even think it, right? Next time. Try and approach it differently. Oh, shit. All right, how am I doing? Okay, so have we got everything covered? What am I doing on time? I've got one of my members wanted me to look at Ethereum with him. Oh, let me see how long we are here, and I've cut this video sometime. I may do a separate video for ETH here because he had some good ideas on ETH, and that's, you know, kind of getting a lot of media attention as we go into the merge. So I'm gonna end this one here because I think this is enough here. And if there's, I think maybe I'll come back and do an ETH video as well. Okay, guys, with that, I'll wrap it up here on the Bitcoin video. Just a reminder, right? So if you guys, you know, you'll start seeing us feature BitGet a lot. And for those of you that are interested, I will be doing kind of a walkthrough video. I'll do that for members, but I'll post it up on YouTube as well. For any of you who are like, okay, this is good, but why this has changed over others? What's their big strength? And I will tell you just in just a little bit here. It's the futures trading here. I think I got all my stuff on that. But it's the futures trading that really makes BitGet, you know, worth taking a good hard look at. Right? It's very, very fast, very easy to trade. I think if you're a futures trader, if you prefer trading futures to spot, I think you're going to like what you see over at BitGet. Okay, with that, I'll wrap it here. It looks like I'm going to be back for an ETH video. If I don't do it today, I'll do it over the weekend. Okay, guys, with that, have a good weekend. Hope you picked up a little something out of this. Don't forget to check out our link tree below for all sorts of little deals and promos that we can offer to you, from Sonar Labs to discounts on or promotion, or maybe a free month of the educational membership with a BitGet account. Right? So there's a few things, and then a few other resources here that we recommend to you. All right. So with that, you guys have a good weekend. I'll be back on Monday for a live stream. Until then, take care.